Ever wondered what would have happened if you invested $1,000 in Shopify in 2018? That's a question we'll explore today, diving into the financial journey of this e-commerce giant. We'll analyze Shopify's financial performance over the years, revealing the value of that hypothetical investment at the end of this video. Understanding the value of an investment requires more than just looking at stock prices. It necessitates a deep dive into the company's financial health and business performance. The story of Shopify's growth and development is not just about the numbers, but about the company's strategic decisions, market trends, and the overall economic environment. Back in 2018, Shopify was already a well-established platform, empowering businesses of all sizes to start, run, and grow their online presence. It was the go-to solution for many aspiring entrepreneurs, and its potential was evident. But how well did it perform financially? We'll analyze key financial metrics like revenue growth, profit margins, and net profit. We'll investigate Shopify's financial health, looking at its assets, liabilities, and cash flow. We'll also perform a DuPont analysis, which breaks down return on equity into three components: net profit margin, asset turnover, and equity multiplier. This analysis will give us a more nuanced understanding of Shopify's financial performance. Remember, this is more than just a historical analysis. It's about understanding the factors that drive a company's financial performance to make informed investment decisions. It's about seeing the bigger picture, beyond the ups and downs of stock prices. Investing in stocks is not just about buying low and selling high. It's about investing in a company's future, believing in its vision, and understanding its strategy. And that's what we aim to uncover today with Shopify. So, if you had $1,000 to spare back in 2018 and decided to invest it in Shopify, what would it be worth today? Well, we're about to find out. Stay with us as we embark on this financial journey to find out the worth of a $1,000 investment in Shopify. Shopify's revenue has been on a consistent growth trajectory since 2018. In just 5 years, Shopify has catapulted from a revenue of $1.1 billion in 2018 to an impressive $7.1 billion by 2023. That's a staggering compound annual growth rate, or CAGR, of 45%. To break it down further, the yearly growth percentages tell an exciting story. Between 2018 and 2019, the revenue growth was 45%. It skyrocketed to 81% from 2019 to 2020, then held steady at 59% from 2020 to 2021, while the growth slowed a bit to 22% from 2021 to 2022. It picked up again to 27% from 2022 to 2023. These numbers indicate a trend of consistent and robust revenue growth that is a testament to Shopify's business model and strategy. Additionally, Shopify's gross merchandise volume, or GMV, grew from $41 billion in 2018 to a whopping $236 billion in 2023, with a yearly CAGR of 42%. The gross payment volume, or GPV, also saw a significant rise. It went from $17 billion in 2018 to $137 billion in 2023, reflecting a CAGR of 53%. In 2023, the revenue to GMV ratio stood at 3%, slightly above the 6-year average of 2.7%. An interesting aspect of Shopify's revenue structure is its division between subscription and merchant sources. 75% of the revenue comes from merchants, while subscriptions contribute the remaining 25%. Impressive growth, right? But that's not the whole story. As investors, we know that revenue growth is just one side of the coin. Profitability is equally important. Let's delve into Shopify's profit margins. Shopify's gross profit margin in 2023 stood at 51%. This is slightly below the 5-year average of 53%. Gross profit margin is the percentage of revenue that exceeds the cost of goods sold, indicating the efficiency of a company in managing its labor and supplies in the production process. A slight decrease in this margin could be due to various factors such as increased production costs or pricing strategies. Let's move on to net profit margin. This is where things get interesting. Shopify's net profit margin in 2023 was 1%. Quite a leap from the negative 63% in 2022, isn't it? However, it's still significantly lower than the 63% we saw in 2021. So what caused these wild fluctuations? The answer lies in Shopify's other income or loss, which relates to their investment activities. In 2021, the company had a significant other income. which led to the soaring net profit margin. Conversely, in 2022, they incurred a substantial other loss, causing the margin to plunge into the negatives. In 2023, we're seeing an improvement, albeit a small one. The net profit margin of 1% indicates that for every $100 of revenue earned, Shopify made a profit of $1 after factoring in all expenses, taxes, and interest. And let's not forget the net profit. In 2023, Shopify's net profit was $100 million. This figure might seem low compared to the $2.9 billion in 2021, but it's a considerable improvement from the negative $3.5 billion in 2022. Despite some fluctuations, Shopify's profitability has shown resilience. After all, in the world of business, it's not just about how much you make but also how much you keep. And in the case of Shopify, they've managed to keep their head above water, even in challenging times. Let's dive deeper into Shopify's financial health and cash flow. The total assets for Shopify in 2023 stands at a significant $11.3 billion, a healthy rise from $10.8 billion in the previous year. The net assets too have seen a positive trend, standing at $9.1 billion in 2023, a rise from $8.2 billion in 2022. The company's financial health is further underlined by the equity to total assets ratio. In 2023, this ratio is 81%, a substantial increase from 76% in the previous year. This indicates a strong balance sheet, with Shopify owning a significant proportion of its assets outright. Now, let's turn our attention to liquidity. The current ratio, which is a key indicator of a company's short-term financial health, for Shopify in 2023 is 7, up from 6.78 in 2022. This shows that Shopify has more than enough resources to cover its short-term liabilities. Another important measure of financial health is the receivable days. In 2023, Shopify's receivable days stood at 15, down from 20 in the previous year. This reduction indicates that the company is able to collect its receivables quicker, which can significantly strengthen its cash flow. Speaking of cash flow, let's take a look at Shopify's operating cash flow and free cash flow. In 2023, both these metrics stand at an impressive $900 million. What's more, there's been a consistent upward trend in these cash flow metrics from 2018 to 2023. This shows that Shopify is generating increasingly more cash from its operations, which is essential for its growth and stability. In summary, Shopify's financial health is robust, with strong total and net assets, an impressive current ratio, quick receivable days, and a consistently growing cash flow. Now that's a financially healthy company with strong cash flow. It's time to dissect Shopify's return on equity with a DuPont analysis. The DuPont analysis breaks down return on equity, or ROE, into three components: net profit margin, asset turnover, and equity multiplier. Let's take a closer look at these components for Shopify in 2023 and see how they compare to the previous year, 2022. In 2023, Shopify's ROE was 1%. This is a significant improvement from the negative 43% ROE in 2022. This change can be attributed to several factors, but let's break it down further. The net profit margin for Shopify in 2023 was 1%, a stark contrast to the negative 63% in 2022. This shows us that Shopify has become more efficient in turning revenue into actual profit. Next, we have the asset turnover ratio, which was 0.64 in 2023 compared to 1.04 in 2022. This indicates that Shopify has become slightly less efficient in using its assets to generate sales. Lastly, we have the equity multiplier. In 2023, this was 1.24 compared to 1.32 in 2022. This suggests that Shopify has been slightly less reliant on debt to finance its assets. Now let's circle back to the initial question. If you had invested $1,000 in Shopify in 2018, what would that investment be worth today, in March 2024? Well, prepare to be amazed. Your $1,000 investment in Shopify back in 2018 would now be worth a whopping $5,515. That's a 452% increase in value, or an annual growth rate of 41%. And there you have it. Your $1,000 investment in Shopify in 2018 would now be worth a whopping $5,515. That's a 452% increase. We've reached the end of our financial journey with Shopify. We've seen impressive revenue growth, a resilient profit margin, and a strong financial health. The value of a $1,000 investment in Shopify in 2018 would now be a whopping $5,515. Quite a return, isn't it? Thank you for joining us on this analytical adventure. Don't forget to subscribe for more insightful financial analyses.